Hello everyone, AKT here. Welcome. I just thought I'd do a quick video just purely to save my fingers this weekend. As you know, many times I do a blitz of various charts over the weekend, and I get a lot of questions about the methodology and why is this a zone, why is that not a zone. So I thought I'd just do a chart and talk through a chart with you all just to show you how I look at charts. For those of you who don't know, this is where we hang out. This is the Trading Institutional Order Flow thread on forexfactory.com. It's a great place. We're building a friendly educational community where we learn off of each other. We share ideas. As you can see, it's where you can post charts and you can ask questions, you can put up trading ideas, and I've become friends with quite a number of people here, and it's a lot of fun. So if and when you get a chance, www.forexfactory.com, and it's in the search box, just put in Trading Institutional Order Flow and join the chat, have fun. Okay, before I look at any charts, I just want to say, please don't listen to a word I say. Do not listen to me. I am not a registered trading advisor. I'm just a regular retail trader trying to better himself in the markets. I've just developed a significant expertise in a particular methodology, the supply and demand methodology. That's it. Please pause the video and read the disclaimer at your leisure. For me, I'm going into the charts. So this is what I'm looking at. I'm looking at the dollar index. Oh, this is the chart. This is this chart setup that I use. And that's the macro picture, 12 months. That's the quarterly picture, the 3 months. And I have the monthly, the weekly, the daily. I have the session charts and then the intraday charts down here. So I always like to look at like the big macro picture. And this is all the data we have on the pound. It's what all TradingView, which is the charting package that I use, it's what they have. And it goes as far as 1986, 1985 even, which is enough, I guess. So looking at this, I would always say, right, is there anything interesting? Can we glean any information from the macro picture? Because at the end of the day, with all the fundamental stuff behind any pair, the main thing that matters to us is obviously the price of the pair, whether the interest rates are this or the GDP of the countries are that. At the end of the day, it will all be represented on where people put their money, which is shown on the charts. So using the information we have, this is what I see. So we have a broken momentum line, which left a demand zone down in here, which, as you can see, when price came back into it here, it had the big rally. Now, if this is a supply zone, if we assume this is a supply zone, because again, it's all the data we have. So I'm talking about this area. If that is a supply zone, then it was removed by this one. I'm using this to show what I call the interrelationship of zones on a chart. All the zones on the chart are, governed by supply and demand. That's what governs the markets, at least from my point of view, for the methodology that I use. I'm sure everyone has their own methodology, and every methodology works pretty much. It's just a matter of knowing how to work it. So if that was the demand zone that removed that supply zone, we've had this demand then taken out by this area, which would qualify this area as a supply zone. Now, what took out this demand zone? If we extend it, we see that this demand zone was ultimately removed by this gobbledygook over here. So this area being supply, removed by this area when the price rallied over here, leaving this behind, would make this a demand zone. That's why I've marked the two of them in. Okay, so macro picture done. If you go to the quarterly picture, we'll see that this, let me just use this polling line tool, which is a really cool tool in TradingView. Some people think this is like a zigzag tool. It's really not. The zigzag is a very different tool. So this is the way that I see it. This high right here is higher than this one, so that makes that a pivot high, and then prices come back into it. Now if we just draw the two most recent pivot lows, we will see that the momentum line, the trend line that we use to measure as a momentum measure, and you can use any indicator that measures momentum if you like. I just prefer the trend lines, or you can use a combination of both. There's no hard and fast rule about it. Supply and demand, contrary to what many people think, does not say do not use indicators. What tends to happen though is the minute you get good at it, you find you don't really need the indicators. You just follow supply and demand. The methodology says supply and demand must be the basis of your decisions, not the indicators, but the indicators can serve as confirmatory to what your levels are telling you. So if you, for example, use a momentum indicator or an RSI or a stochastic, you'll probably find some divergence up in here somewhere, whether on this chart or a monthly chart, that kind of thing. So we have this momentum line broken, price comes into it, it's there right now, and these are the demand levels that I see below. That's demand because it took out this supply, and this is the big area that also inherited its levels from this one, having taken out these ones over here. Okay, so that's the quarterly picture. So that gives me information that I'm thinking the dollar is likely to start struggling in the not too distant future, which would embolden the euro, the pound, the Aussie, New Zealand, all those major pairs against the dollar. So here's the monthly. Again, the monthly is just helping us see that clearer, the moves clearer, and we can see here, this is it. So that high is just slightly higher than that one, which leaves us with these two pivot lows, and we join them to make the momentum line, and we see that the momentum on the monthly has ended. The upside momentum has ended. That low is lower than this low here, and price is now rallying as we expected, as I've talked about with some of my friends. Price is now rallying back into monthly supply, so we're expecting that the dollar in the next maybe couple of months is likely to start tipping down if this supply zone holds. I'm not saying it's going to hold. What I'm saying is, if it holds, expect the Aussie, the pound, the euro, all those major pairs to start rallying up as the dollar falls. How far will it fall? Well, this is the nearest demand zone that I see on the charts. It won't fall in there in 2 months or in 3 months. This could take years. This move could take years. So we don't know. So that's the way I see the macro picture for the US dollar, and that's how I do my analysis. These charts, because they're monthly charts, they tend not to need updating. The weekly and the daily, obviously the weekly needs updating once a week, the daily needs updating once a day. That's pretty much it. So that's the dollar. So if we look at the Euro GBP, I think I've also marked that up just to shorten the video. I don't want you guys falling asleep on me. Okay, so this is what I see. This area is not supply by the definition of our rules, because it hasn't done anything to make it qualify as a supply zone, but it's somewhere to be aware of, because the last time price was here, it fell away for 2 years in a row. So it's not somewhere to ignore. It's not a place to ignore. And we have, again, a demand zone which, based on the data we have here, if we say this supply, it has a a big move away from it. This move took it out, so that's why I've drawn that in as a demand zone. And you can see when price returned to it, that's what's caused the rally the last year. So this candle will close on December the 31st. Okay, and the quarterly view. So again, just a quick lesson on the interrelationship of zones on your charts. Supply and demand is all that I see when I look at charts. So we have that demand zone that took out all of this supply in here, and as we can see, that demand zone price came back into it, rallied up for 9 months or so, a year, and then fell down and was broken by this zone in here. So I'll just take this out. So we have this as supply, price pulled back, fell shy of the demand zone here. You can see the big rally. It didn't get there, but then started rallying and then took out a supply zone, which left a demand zone down in here. It's now into this area. Now the question is this area a supply zone? Well, technically the answer is yes, because it inherited its status as a supply zone from this supply zone here. Now that this supply zone has been broken, this is the next supply that price has to do, the buyers have to do battle with, which leaves us with supply above, demand below. Price is into the supply zone. We expect some selling to start coming in, and this quarter, this is the first month of this quarter, we're into the last week from tomorrow. So you can see there has been some selling pressure. Whether it'll close like this or higher, we'll have to wait till, I think, the end of September is when that candle will close. So coming to the monthly, we see that price is into this previously tested area and has penetrated deeper into it. This has just 1 week to close, and you can see the amount of selling that has happened this month already. Price penetrated this zone even further because obviously the first penetration would have taken away some of the stack of sell orders in here. And this is the nearest demand zone that I see, which took out this supply zone, that supply zone, and ultimately we have that as well. So but price has to get through this before it can get there. So price is reacting off of supply. I'm naturally not looking, surprisingly to most people, they see an uptrend and they're looking for opportunities to buy. I see an opportunity to buy, but just not yet. Prices are too expensive for me to. This is premium. This is value. I want to sell premium and I want to buy value. So I'm looking for opportunities to sell because of where price is and hoping to buy down in value. So that's the monthly. Won't bother with the weekly. There isn't that much information in there. Then looking at the daily, we can see again the upside momentum is now broken. Remember where we are. We are very expensive. We're into a premium level, and we see that the upside momentum has ended. You'll see if I use the polyline tool again, we have one pivot there, then price rallies up and then falls back down into this pivot before rallying up again. So it's just very tricky to join this pivot with this because it's so the way it's positioned is very difficult. So this is the best fit that I can see. And another reason why this zone is supply is because it's taken out this little demand zone in here. So we now have a supply zone which is inside a monthly supply zone as well. A daily supply inside a monthly supply. This is an area that I personally would be interested in to start looking for selling opportunities. As a day trader, this would be your universe right now. This supply zone, this demand zone. You can see day traders selling not selling, buying, and making quite a lot of money in here. Now, for example, if I take this down to a 15 minute, I'll use this chart so we'll be able to see the lines still. Where are my lines? Yeah. Okay. So we have supply above. This is that big daily supply up there. Price is into the daily demand down here. And as a day trader, I would be, and I did day trade this a while ago, I believe. I take too many trades to even remember what I've done. So you would be watching this chart and you would see price pulling down into your daily zone. You're watching the momentum to see when that momentum ends, and you find the momentum ended right there. So immediately you would have been drawing in your zone and saying, okay, so I'm a day trader. I want to look to buy this because it's in a daily demand zone. So that's a demand zone right there. That was a ginormous demand zone. Because of that wick, it would have been a bit more difficult to trade that. But what it did do was, again, look at this big move. You see it took out that supply zone. It was stopped by the zone above it. But what it left behind was this demand zone. And this was the cream trade. This was the cream trade right there. I have a friend called Jeremy who he would love this kind of trade. These are the kinds of trades he takes, and he's doing okay. He's doing quite okay, getting to grips with the methodology now. And this is, you see the move out of it. Boom. This is just using supply and demand. You can use indicators as well if you want, but remember the basis, the foundation must always be supply and demand. Okay, so join us if and when you get a chance on the Trading Institutional Order Flow chat. You can talk with us. You can ask any questions. People from all over the world are here. I post a lot here. You'll see me as AKT, and have fun. Okay, everyone. It's been great. AKT out.